You probably think you control your own money. You decide what to buy, which stock to invest in, or whether to take out a loan. But that's no longer true. Today, algorithms and artificial intelligence already manage huge parts of the financial world, quietly, invisibly, and in fractions of a second. They decide which ads you see, which prices you pay, which loans you get, and even how markets move. And the most fascinating, or frightening part is this: you don't even notice it happening. Stay until the end, because you'll discover how deeply AI already runs our financial system, and why your money might not really be yours anymore. Not long ago, trading floors were filled with shouting brokers, ringing phones, and flashing numbers. Today, most of that noise has vanished. Around 90% of all global trading is now executed by AI and algorithmic systems. These programs analyze millions of data points per second, news headlines, social media posts, even weather patterns, and automatically decide when to buy or sell. It's called high-frequency trading. And it's so fast that no human could ever keep up. Signals between New York and London travel in less than a millisecond. And in that time, an AI can execute thousands of trades. Impressive, yes. But it also comes with a dark side. When many algorithms react to the same pattern, entire markets can crash within minutes. In 2010, that's exactly what happened. One algorithm started selling rapidly, others followed, and within moments, the Dow Jones plunged more than 1,000 points. A so-called flash crash, triggered not by panic but by code. Today, banks and exchanges try to prevent such scenarios, but the truth is, no one fully controls these systems anymore. Even developers don't always understand why their models make specific decisions. And while billions move every second, humans have become mere spectators in a financial system that increasingly thinks and acts on its own. It's not just Wall Street. Artificial intelligence now makes decisions deep inside the banking system itself. When you apply for a loan, it's rarely a person who reviews your application. A machine does, analyzing your income, location, job history, spending patterns, and sometimes even your online behavior to generate a risk score. If the score is high enough, you're approved. If not, you're rejected, sometimes without explanation. That's because many of these systems are black boxes. They give results, but no reasoning. Even the banks themselves often don't know why the AI said no. It gets worse. If the training data used to build those models contains bias, for example, that people in certain neighborhoods are more risky, or that irregular income means unreliable, then the AI simply learns and repeats those patterns. In the US, there have already been cases where black applicants received worse loan conditions, not because of their finances, but because the AI inherited decades-old inequality from its data. These systems are efficient, consistent, and profitable. But they also replicate discrimination, invisibly. We are entering an age where machines decide who gets a home, who gets credit, who grows wealth, and the most dangerous part, we might not even realize it's happening. Maybe you're thinking, okay, that's banks and trading, but not me. You'd be wrong. Artificial intelligence influences your daily financial life more than you can imagine. Every ad you see, every product recommendation, every special offer, all are chosen by AI recommendation systems that analyze your clicks, your screen time, your mood, even the speed of your scrolling. These systems build a profile of you, a digital twin that knows what triggers you, when you're tempted, and how likely you are to spend. And they don't guess, they calculate. Ever notice that prices sometimes change when you revisit a website? Or that plane tickets cost more on your second search? That's dynamic pricing, an AI adjusting prices in real time based on your behavior, device, and location. It's called market optimization. In reality, it's psychological manipulation dressed up as economics. The line between helping you and controlling you is getting thinner every day. And the scary part is, it doesn't feel like manipulation. It feels like convenience. You think you're deciding, but AI already made the decision for you. Behind all of this lies one simple truth: data is the new money. Every card swipe, every online purchase, every tap on your banking app creates data. Banks, fintechs, and corporations collect it, analyze it, and feed it back into AI models. Your spending habits, your payment timing, your credit history, all of it forms a financial fingerprint. It reveals how you behave, what you fear, and even what you might do next. That information is worth billions. It decides what interest rate you get, what insurance you pay, and which ads you'll see. In the United States, data mostly belongs to corporations. In China, it belongs to the state. And in Europe, it's supposed to belong to the citizens, but in practice, it often belongs to nobody. That imbalance shapes how AI evolves. Open, diverse data creates open systems. Censored or monopolized data creates control. And when the same few companies own both your data and the algorithms that process it, they don't just predict your behavior, they can influence it. The question isn't who has the most money anymore, it's who has the most data. Because in the age of AI, that's what true power looks like. While we talk about AI and banking today, the next revolution is already on the horizon: digital currencies and AI-driven economies. Central banks around the world are testing CBDCs, central bank digital currencies. They promise faster payments, less fraud, and better oversight. At the same time, private corporations are developing AI systems that analyze entire economies in real time, adjusting interest rates, predicting inflation, and even automating investments. Imagine an AI managing your finances for you, moving money between savings, stocks, and crypto, optimizing your returns every minute, never sleeping, never panicking. Sounds perfect, maybe. But what if that system crashes? What if a cyber attack manipulates it? Or what if a government decides certain transactions are unacceptable? The same tools that make money smarter could also make it dangerously controllable. We may soon live in a world where physical cash disappears, and every transaction is logged, scored, and analyzed by algorithms. That would make taxes easier, but privacy nearly impossible. AI might make banks obsolete, but it could also make financial freedom a thing of the past. Artificial intelligence already controls more of your money than you realize. It decides prices, risks, credit, and even your habits. Maybe the real question isn't if AI controls your money, but how much control you've already given it. The financial system of the future will run on data and code, not on cash and trust. And if we want to stay in control, we need to understand the systems running behind the screens. Tell us in the comments, would you trust an AI to manage your money if it performed better than you? And if you want to see how technology is shaping our future, subscribe to Focus Future.